Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news labour markets keep on contracting, especially in the US. 3.8 million more Americans filed claims for unemployment benefits last week, suggesting that layoffs were spreading to industries that were not initially directly impacted by business closures and disruptions related to the coronavirus. Last week's tally was more than expected and brings the total who have sought jobless benefits to more than 30 million in the past 6 weeks. Officially, the insured unemployment rate is 12.4%, but 30 million of a workforce of 156 million is 19%, and they started with more than 4% unemployed, so the total has to be at least 24% now. It'll be no surprise then to learn that in March, personal spending fell sharply, down 7.5%, but before the pandemic grip really took hold, the April data will undoubtedly be much more ugly. But all the same, a 7.5% drop is one of the largest month-on-month drops ever. The decreases are just massive, down $830 billion in spending for services, down $105 billion in spending for goods. Expect the April drop to be much larger and exceed $1 trillion. These are world-scale shocks that will reverberate globally. The US Fed expanded its Main Street lending program to be sure it captured larger firms that were still not big enough to tap public capital markets. And more massive US fiscal stimulus is on the drawing board. And it is looking increasingly like China isn't going to be able to pull the world up in the absence of the US. After broadly stabilising in March, operating conditions across China's manufacturing sector weakened slightly in April, although they aren't contracting yet. Very weak international orders are holding back any expansion. In fact, export orders plunged after a brief March bounce. Not so in Singapore, however. Their business confidence index fell from -12 in March to -56 in April. The ECB has decided to effectively pay banks to lend money after their economy shrank the most in decades. But the worst is yet to come, warned Christine Lagarde. US Treasury 10-year yield is firm at just under 0.63%, and gold is down sharply today, down another $19 to $1,686 an ounce. And oil prices are higher again today. In the US, they're currently at just under $17 a barrel. That's a $2 gain, but still well below the cost of production for most drillers. International oil prices are up a similar amount, just on $25 a barrel. And the Kiwi dollar has firmed again overnight against the greenback and is now at 61.4 US cents. On the cross rates, we're back up to 94.2 Australian cents, and against the euro, we're still firm at 56.1 euro cents. That means our trade weighted index is now at 67.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.